Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be continuing with the work which we have done so far using the awesome oscillator. This is a technical indicator which tries to measure the underlying momentum, the driving force behind the price action which we are seeing any instrument of our choice, and it will help us determine the trend and the subsequent reversal if any. Along with the awesome oscillator, we will be also using the ATR, the average true range, which will help us the volatility to map the volatility and then design the algorithm accordingly so that we are always in tune with the momentum which is moving the instrument, and that will help us increase the probability of making profit. Along with that, we will also use the min-max. It's the simple mathematical indicator, the highest and the lowest values specified over a period of time. Before we get started, this is a standard disclaimer, and as always, I would also like to remind today that this is simply a tutorial session, and whatever algorithms which we will be developing during the session are simply for understanding purposes, and no claim is being made regarding the profitability or otherwise of the algorithm shown during the session. And suppose if you feel anything is useful and if you want to use it, then I would suggest that you do extensive amount of trial runs for months and months and maybe even years, and then let it run on the demo account for sufficient enough of time to get an idea of the working and intricacies of the algorithm. And of course, nothing in the webinar is to be constructed as an advice to trade or an advice for a particular setup. On that note, let's start the day. Before we go into the details, here this is a brief synopsis of the underlying idea with which we are working today. Let me make it 4 hours. So on the 4 hours, we need the momentum to be in the bearish trend. That is, the negative value should be falling for us, for our algorithm to go for a short sell trade, and for buy trades the values, the positive values should be rising, and in this time the algorithm will look for buy trade. But when the positive value starts to fall, the algorithm will simply stop trading. It won't be executing sell trade, it won't trade, that's all. So against the trend, unless there is a significant change of momentum, we are not going to go for any contra trade. And similarly is the setup on the hourly charts as well. So we will be looking for short sell whenever the momentum will turn bearish, and we will be looking for long trade whenever the momentum is bullish, and it is still growing strong. And as soon as it starts to reverse, we will stop the trade execution. So that has been the underlying idea, and the ATR which we are using on the daily time frame. So we will be mindful of the ATR, and it will help us determining the entry and the exit point, and also we will be framing some conditions which will map the volatility, and then uh, help us better optimize the order for entry and exit. And here we are going to simply use the ATR for the last day, the prior day, with shift 1. And as you can see here, that the ATR for yesterday is a bit higher compared to today, and that is simply because the day has just started, and we are yet to see significant volatility. And in the initial hours of every day, the current day's ATR will be lower than the prior day's ATR, as the day is simply session is simply getting underway, and of course that will mean that the action is going to happen in the rest of the session, the remaining part of the session. So this is it. And one thing, while developing the setup yesterday, I felt that we should be also taking the help of min-max, And what we will do, we will simply map the last 4 or 5 hours minima and maxima, and we will try to make sure that enough of momentum is there in terms of ATR. We will define the ATR range, and then we will map it on the min max. And so what we will do is that whenever the trend changes, suppose if it is changing from bearish to bullish as it is happening here, then the price action should be good enough for us to warrant a trade. Sometimes what happens, there is simply sideways price action, nothing much significant, and then the trend changes from one way to another. But unless and until there is a significant price movement, there is no point getting involved in any trade, and that is the reason why we are going to go for entry condition which will define the min max range. As you can see here, the 16 GMT somewhere here, and even if we were to go for any trade, we would have simply seen this price range, and then we are also going to use one more condition of the min max, where we will simply try to make sure that there is no significant deviation from our requirement. So let us add the min max conditions here. We will first need to zoom out, and depending on your personal preferences, you can utilize the min max values for last 4 hours or 5 hours. We are simply just trying to make sure that the recent price action is good enough, and even I think 4 hours should be good enough. 48 hours, sorry, 4 hours, not 48 hours. So let's add this maxima. The maxima is not yet visible, and the minima. Oh, what's wrong? Okay, we will do quick search here. Max. We got the maxima. Again, it is not visible. Something is fishy, I guess. VJ tooltip. Okay, so it is here, but we want it to be visible on hourly charts as well. And edit indicator, output, advanced. This is defined for 5 minutes, and what we will do, we will change it. And as you notice, that is defined on 5 hours. Suppose if we want the 4 hours data, what we will need is we will need it to utilize the 48 period time frame, and 48 multiplied by 5 will turn out 244. 248 minutes, 240 minutes is equals to 4 hours. So that will be the condition here. And this is low price. Okay, and same thing, we change the upper value as well, and we make it 48 here too. Now we got the 48. Oh, one more maximum was there, we remove this. Okay, now all set. Yes, fine. So see here, I will explain the rationale. The rationale is that suppose if you are going to look for any short sale, so whenever the trend will change, what will happen that now as you can see here, the trend might have changed from being bullish to bearish territory, and we want to make sure that this difference, the maximum value and the minimum value, we will define the ATR range say of 30 pips of the day, 30% of the day. and then we will put in the condition that the difference between maxima and the minima should be more than the 30% of the ATR. That will mean that the recent trend change is carrying a sufficient amount of momentum, and it is not simply the consolidation phase. So sometimes it is turning bearish, sometimes it is turning bullish, and simply for that reason we will be adding these min-max conditions. So I hope you are getting my point. If you feel there is any confusion, you can write it in the comment section as well. So we will calculate the difference between maximum and minima, and we will define the 30% of the ATR, and then we will make sure that this difference is more than 30% of the ATR. And one more thing is that we want to make sure, as you can notice from here, we will be doing one more thing, that whenever, suppose here now the momentum has turned from bullish sides to bearish, and we want to make sure during the entry condition we are going to put in a condition that the trade is supposed to execute only when the last candle close. We will bring in a 1 minute candle, and that candle close should be within the 20% uh, of ATR range from the maximum value. Suppose if it is a sell trade, and suppose it is a buy trade, then the last candle close should be within 20 percent of the ATR range from the minimum value. And also the we will use the current maxima value for a sell trade. We will simply use the current maxima value, and we will define the requirement that the current maxima should be equals to or less than the 12 candle period back, that is 5 into 12, that is 1 hour back, and it should be equal to or less than. So that will ensure that if there is a significant jump in the price, then our algorithm will simply stop trading, as the deviation will cause the maxima to rise, and that will ensure that our basic requirement of price being sustaining the downward momentum is there. And for making sure that is the case, we can even add one more block to compare the maxima value to say 2 or 3 candle period back also. And similar setup we will set it on the buy side as well, and during the buy side we will be comparing the minima values, the recent minima values. So these are the requirement. Let it convert on hourly chart. So here this is the same setup. We have used the custom parameters here, and it is still showing as per the calculations done on 48 candles of 5 minutes, and that is roughly 4 hours. So whenever the momentum turns from bullish to bearish, we will be we will be calculating the gap between these minima maxima, and we want to make sure that the last tick price is within the 20% ATR range of the maximum value. And whenever our algorithm will be looking for a buy trade, as it is we are seeing some shift here, and then we will try to make sure that the last candle close value is within the 20% range of the minima values. So that is the underlying idea, the logic which we are going to work with in today's trading session. So let's get started. This is the setup which we have done so far, and is I hope you are well familiar with. This is the simple standard subscription for the instrument Euro USD. This is the position amount defined at 0. Then these are awesome indicator blocks for 4 hours, shift 1 and shift 2. So we will be comparing the last penultimate candles, 2 candles, and they should be in the momentum as per our requirement, either bullish or bearish, and then we will try to compare that 4-hour candles momentum with 1 hourly candles. And here also this both the momentum for 1 hour and the 4 hour either should be bullish for a buy trade, and in the bearish territory for a sell trade. This is the ATR and the ATR. Here the shift one, that is yesterday's ATR, and these are historical candles which are going to help us get the last candles highest, lowest, and the closing values. We will be defining that last candle should have closed in red for a sell trade, and should have closed in green for a buy trade. So we will try to define that requirement using these historical candles. And then these are again awesome indicators. Here the shift 6 and shift 7, that means that we will be seeing here, as you can notice, that if the momentum has freshly shifted into bearish territory, then we will require that the momentum 6 and 7 hours back should have been in the bullish territory and falling, or otherwise even if it was in bearish territory, then the consolidation phase should have been underway, and the bearish momentum was being lost, and again now fresh renewed selling momentum is coming in. So just to make sure that is the case, we will be utilizing these awesome indicators 6 and 7 blocks. So let's get started for the day. This is the minimum ATR value. I think we have defined it for let me see what was the parameters for yesterday. We have defined it at 0.1, so that will make sure that 10% ATR is the price has been defined for the 10% of the ATR, and then we will use this value during optimization requirement. Now for the day we will need to bring in min-max blocks, and then we will also need to do the further calculations using those values. Let's bring in the min-max first. Mathematical, this is the min-max indicator, and we will need 4 min-max blocks, and even I think we will need more than that, because we want to separately to do comparison for the ask and the bid values. Whenever we are looking for minima, we will be comparing the bid values. Whenever we are looking for maxima, we will be comparing the ask values. So for that, this is the requirement. And we have brought in 4 minima, maxima. We will need 2 more. So this is it. Now we line this block here just below this row, and we connect this requirement here. Okay. This is going to be a pretty big algorithm, I guess. When we will take a look on the final code, I am pretty much sure it is going to run more than 1000 lines. And the only thing we have to be concerned of that it might take more time for test run as the algorithm gets complex and lot of line of code. The test run gets slower and this is it. Now we change this time period to 5 minutes each and we bring this 30, we convert this 30 to 48. The instrument is default Euro USD, it's okay. Let's change this value to 5. So this is it, 555. Each min-max candle has been defined for 5 minutes. And now we change the time period from 30 to 48 each. 48, 4 hours. Here also 48. And then we will utilize these values to compare the recent volatility with ATR, the average true range, .48. Here also 48. Okay, so far so good. Now what we will need to get the 3 blocks each. Now we have 6 blocks here. We will make the changes. We will convert the bid blocks to the low price and we will set the ask blocks for the high price. And this is it, bid again and low price. Then we convert the bid side to ask and we apply the high price. Similar story here, ask and high price, again ask and high price. Okay, so these things are clearly visible to you, I hope. And now we will be comparing the current value to the 3. I think even if we use 15-minute back time frame, it should be good enough. Or 12, yes, 2 or 3, whatever whatever suits your purpose should be good enough. Let's make it 3. So we put the shift value at 3 and this we shift back to 12, that is 1 hour back. Okay, similar story. Again here shift 3 and shift 12. So far so good. We have defined the min-max conditions as per our requirement. Now we need to do some calculations for defining the ATR range. And let us look for the calculation block now. Indicator and the components, and here comes the calculation expression. We want the range to be good enough for any trading activity, and 35 we will simply put in 30%, and that should be good enough. For last 4 hours the value should have moved at least 30% of the average true range, and for that we will need to define a variable 4 hours volatility. So we write it FV, we put it value as 0.4. If we multiply the ATR by 0.3, sorry, 30%, it should be good enough. And then we bring in the FV here along with the ATR value, and that will get us the job done. So here is the ATR value, line 21, and we define this as A1 into A2, and the resultant requirement would be execution value, EV. So we have defined the EV here. And we will also need to compare the min-max values. So we again bring in another calculation expression, and then we will subtract the values between the maxima and the minima. So we do that. We take the current maxima value and the current minima value, and this is the low price, the bid. So we go for the current maximum value, and this is it. We take this oh, maxima of high value, and we deduct the minima of the low value, A1 minus A2, and the requirement will be let it remain name as min-max difference, MMD. Okay, so this is min-max difference, and we will need the min-max difference, MMD, to be greater than the execution value, the EV. So we have defined this requirement, and with this I think for the day we are now running short on our time. So we have defined these calculation requirements, we have brought in the min-max conditions, and also I explained the rationale behind why we are doing this, and of course we will add some more indicators, some more info generating requirements tomorrow, and then we will finalize the buy side and the sell side as we progress with building this algorithm. So once again, I would like to thank you all for joining in. Have an excellent time ahead. See you tomorrow. Goodbye.